So why don't we let's dive in then. And if you have any questions, comments, just let me know. Otherwise, today we'll just do an application session, go through the markets, and identify some opportunities. Okay? We'll start with the forex markets, but we can certainly look at any market. So if you have a market you want to look at, just let me know, and we'll take a look. Okay. Let's see here. Let me just read back a touch. Let's see. I'm reading your post there, Mark. Let's see. I'm almost done. Yeah. Yeah. Good question. So first of all, it's extremely rare that a fresh quality level, that's achieved a high enough odds enhancer score would not work on a 4-hour chart. So when I see something, a question like that once in a while, almost always it's what that person thinks is a level is not really a level. You know what I mean? So we'd have to look at, how you're picking levels or, making sure they're fresh quality levels and all that stuff. And then, yeah, sure, email. Yeah, absolutely, email. I'd be happy to look at them. And then the second thing is with trend, that's where we always make our money, right? So we always want to enter the trend. Just want to enter on pullbacks to supply and demand zones, right? That's really the only way to attain that low risk, high reward, and very high probability entry. Okay. Yeah, I mean, that's how you do it. So as far as, breakout entries, you'll never really, your risk is going to be so high. The trouble with breakout entries is your risk is high and your reward is low. And that's just why you don't see, many people making a consistent living, year after year after year trading that type of strategy. Again, it's not rocket science. It all just comes down to how you make money buying and selling anything. You think of anything in life, you can't get away from buy low, sell high, or sell high, buy low. So we put some some parameters around that, and off we go. Some rules. Yeah, here's my email. And here's my email. Sure, email me some charts, some examples. I'll be happy to take a look. And again, I'm telling you, I've been through this for years. 9 times out of 10, there's when someone says, "Oh, why did this level work? It was fresh. It was this. It was this." It's not a level. So we'll get there. All right, let's keep going here. And again, we can look at any market. So I just started with the euro for no reason. That it was on my screen, and you can see on the 4-hour there. Obviously, the euro just left a big zone. See what the 4 hours coming into here. A lot of people with this look at this and say, "Wait, it just blew through this level. That doesn't work." Well, we would never call that a level. That would never qualify as a level. We wouldn't even begin to, score it out because the pattern is off, right? Does that make sense? Yeah, let's see here. Okay. We expect price to go through an area like that because there's no demand left. We know there's no demand left because that's the pullback into that. And when we measure how deep it went into the level, into the fresh level, we see it went almost all the way through. So we conclude that there's really no more significant demand in this area. Does that make sense? But it all comes down to just what is a quality fresh level and what is not. And once you have both of those, once you answer one of those questions, then obviously the other one is answered, and right? And that's what we need, because at the end of the day, we're trying to identify where prices are going to turn and where they're going to go. And anyway, there you go. All right, 15-minute demand zone. Are you talking the euro? I don't know if you're 48.70. Oh, oil. Yes, certainly look at oil. Love to look at oil. So let's pull up a 15-minute chart here. You're talking this area right here. Let's see, 48.70. You're talking this. Yeah, you could certainly see a bounce from here, but this is not a fresh demand zone, right? But you can certainly see a bounce from, but again, that would never qualify as a fresh demand zone. Let's when we come down to a couple smaller time frames, we might see some opposing levels. Yeah, so you could see a bounce, but again, you have a couple areas up here, especially that one. So your profit zone is somewhat limited. So I'd just be careful with that. It's okay. There's probably better stuff out there. But, just as long as you're okay with that profit zone, then the trade's fine. What I would suggest is, try to look for bigger profit zones, certainly bigger than what you're looking to take. So if you're looking for opportunities where you can risk 1 to make 3, make sure the chart is offering you at least 4 to 1 or 5 to 1. Okay. All right. Why don't we start with, and I don't know that we're going to have a whole lot to talk about here with this market, but let's start here anyway. I looked at it this morning. Let's go to the dollar, and let's pull up get rid of some old lines here. Let's go to a 60. We'll start there. All right, the dollar's been, down a ton. Obviously, there's could be more room to go, but we have this unfilled gap area above. The dollar right now is not into quality demand or supply, so you could see it going either direction. When we back out to the bigger time frames, okay, we do have some little pockets of supply above. Now we're looking at a daily chart, so again, very big time frame. And don't forget, this wick over here goes all the way down to 96. Much of the time, price is going to come back to this area, right, and just below it. Now, it may go up before it comes down, but most of the time it's going to come back down to here. Make sense? And this is all that turn at the this is the 103.40 we talked about for quite a long time. So we'll see. Again, in the near term, we'd look for the dollar to come down 2-3 more points. But again, you could get a rally before that. Just remember, larger time frame supply is closer than larger time frame demand. Okay. Next market, or you want me to just, I can pull them up here. Let's look at why don't we look at let's look at the Aussie dollar. Here's that weekly we've been looking at for, boy, it feels like years already. It is years. Price just keeps bouncing off that level. And the bounces are becoming, shallower. So let's see what happens there. In other words, there's probably not as much, obviously there's not as much supply there as there was. When we start to come down to the smaller time frames here, we, let's see. Yeah, we don't have a whole lot of demand until we get down to about here. Okay. Yeah, not a whole lot to talk about here. So, oh, you do have some nice supply up here. I didn't see this one. Here in the Aussie dollar, this area of supply up here looks good. Okay. So just to give you an idea of how we would set this up, yeah, we'll look at the Canadian next. Okay, so here's our level. Right. We would want our stop above that area. So notice I'm doing everything based on what the chart is telling me to do. I don't care about how big the stop is or what the risk is yet. We'll deal with that in a few minutes. I want to make sure that I'm playing the whole supply-demand equation the right way. Right. So there's the high there at okay. So we're going to stop just above that area. And then a target of, so since our demand is like right in here, this is the origin of this rally, we want to put our target just before that. So let's put it in here. Now, to make this very mechanical, which I strongly suggest, if that's where the demand is, figure out what, pick a certain percentage, maybe it's 75%, 80%, 90%, whatever, but something less than 100% of this profit zone, put that in your trading plan to make it very mechanical. And then figure out what that is, and let's say, that represents like 80% of the profit zone. And that becomes your entry, becomes the proximal supply line. Your stop is the price of the red line. And your profit target is the price of the blue line. That makes sense? Okay. The more mechanical and less thinking you can make this, the better. Okay. Let's keep going. Let's look at the Canadian dollar. Not that one. Let's look at this chart right here. I'm not even sure this is the one. You know what? Let's look at the spot market. It's actually nice. Want to see? I thought there's a level here to look at. There it is. Okay, where the Canadian is right now, I'm going to put a horizontal line right here. Oh yeah, we're looking at the spot. Okay, so here's an area. And again, if you're even going to consider taking this trade, we need to figure out where the stop should be. So we'll go down to a smaller time frame. There's that level. Let's go back and confirm that that is the area that it's in right now. Okay, it's just kind of entered this area, just touch this area. And what I want to do now is let's go look at that on a 60-minute chart. And let's make sure we have enough days. So now let's get that data. Okay. Let's scroll back. Let me scrunch this a little bit. So don't scroll too much. All right. So 60-minute doesn't really help us too much with the stop. So we want to go down to a smaller time frame. What we're looking for is what's inside here that I can put my stop, above. And remember, the better level is this rally-based drop up in here. Okay. So keep that in mind. Right. Now, this is a massive stop. So I'm not suggesting you do that. But yeah, if you short it here, it's okay. Just keep your stop just above the level. And I would go down to like a 30 or 15-minute chart to look and see what's in here for a good stop placement. But if you're not sure, this is a nice area up here. Does that make sense? Okay. And this is a breakout, so let's leave it alone, see what happens. That's the Canadian. This does have quite a bit of room on the downside. As you can see, well, let me blow this up again. If and when price comes back down, it should have no problem moving through all that. Okay, that's very acceptable to see before price hits your entry point. And just so you understand just so you understand the logic here, what I circled, does that represent, filled orders or unfilled orders? What does that represent to you? Yeah, filled orders. Look at all the trading that went on in there. Of course, it represents filled orders. And so then the next question, just so you understand it, is when it comes to areas on a chart, price levels where you have a lot, where all the orders are filled, this price can move quickly through those areas or not so quickly. Make sense? Yeah, quickly, right? There's nothing. It's because there's nothing to stop it. All right, so that's that. And that's the Canadian. We'll leave it alone. Obviously, a whole lot's going to have to do with what happens to the dollar here. And again, there's this, the dollar's gap down, and so there's going to be this tendency for it to move up, fill the gap, what have you. And okay. Yeah, you could do that, Mark. I don't do that, but if you're going to scale in, that's a decent way to do it. Okay. I can tell you ahead of time the challenges you're going to have with that. Your best levels, obviously, you're only going to get 25% of your position on, and okay, so, but it's fine, totally fine. And then of the positions, obviously, where you get all your position on, a percentage of those are going to stop out for the full loss, but it'll be smaller because you're scaling in. But the nice thing is the ones that turn, that's going to be an amazing position. Okay. All right, let's keep going. Any other market you guys want me to look at, or should I just keep going through my list? Let's look at copper's been a wild market, just with that move the other day. I see it's pulling back. Dollar's up today, copper down after that big spike. I guess there's not a whole lot to look at here. If you should get I don't know if we trade copper here, but if you should get a rally up to the 266 area here, possibly a shorting opportunity back down to retrace all of this move. That's what's likely to happen. You're probably going to come back down to the origin of that move, but I don't know that people trade copper here. So why don't we move on to the yen? Okay, so here we have, and I think the chart we want to look at here is the 4 hours. So let me get that set up. Nope, 4 hour. Okay. So on the 4-hour, you have a couple levels sitting on top of each other. They're kind of ugly levels, so I just wanted to make sure you saw them, though, with not a whole lot sitting below. So ultimately, likely to come down. But now that you know kind of the larger time frame landscape, why don't we move to a smaller time frame and see if we can find a nice little day trade here. And it looks like we might have one. So here we have that area tied with this whole rally-based drop area. So on a larger time frame, obviously, 60 minute, it's going to look like that, right? But where do you enter and all that? We come down to this small time frame, and we probably want to enter the position, and this one's very close, right here, with our stop above the high of 112.30. There's 112.20, 112.30. So you'd have to have it above that. I'd say 5-10 pips at most. Your target is almost going to be this 112 because you do have some demand and then more demand sitting just below it. Okay. Yeah, if there's a gap up over those, that means there weren't orders there in the first place, or at least not enough to fulfill all the demand coming into the market, right? It's not like someone decides where the market's going to open or close. It's all just pure numbers. It's all just pure supply and demand. So, and that's why almost always, where does any market open on a gap? Where does it gap up to or gap down to? Right? Any market, where does it gap up to or gap down to? Supply or demand, right? Because it has to. Again, when there's a gap up, that just means that while that market was closed, for whatever reason, could have been some news or something, a lot of demand came into that market. So much so that and it gaps because there's not enough supply at the prior day's close to fill those orders. So price is going to move up until you reach a price level where there's enough sell orders or enough supply to meet all that demand. Does that make sense? Everybody get that? And again, all I'm always training your eye to see is those price levels where you have the most demand and the most supply. That's why prices almost always gap into our levels. Okay? Does that make sense? Okay. So we'll leave this one alone. Seems fine. Not a giant profit zone, but yeah, we can take a look at gold. Sure, no problem. That's the wrong gold. This is the one. Get rid of some lines here. All right, so we're looking at gold. Why don't we start with the daily? Well, you tell me, and then I'll put the levels in. In the next few days, weeks, is gold likely to move higher or lower? Higher, lower? Okay. So what we're comparing is this little supply zone above with this area of demand here. Which one looks stronger? Which one appears stronger? Yeah, the supply, because there's less trading activity, right? Tighter base, but more than anything else, less trading activity. Less trading activity equates to a bigger supply-demand imbalance. Okay? And if I bring the, let me pull up the 4-hour next to this. And again, the only thing that would make that level better is if it was a rally-based drop. It's drop-based drop, so a little less odds on that one, but it is what it is. So even when you come down to the 4-hour, you can see there's really not much demand here. Again, suggesting this supply zone on the daily chart has a really big profit zone on the downside associated with it. Does that make sense? $12.45. Let's take a look at $12.45. And for that, let's go to the 60. Yeah, no, this would not, remember, this is not demand. This is just a pivot low. Okay, so no, that would not be demand. We don't really have any demand until, again, quite a bit lower. Even on the 60, boy, it's way down there. Yeah, you have plenty of room. Plenty of room. All right, let's put this chart back. Let's go to our next market. Let's see. Why don't we look at the British pound? I saw a request for that earlier. I don't think we ever took a look at it. The pound had a little level in it earlier. And let's see, where was that level? Oh, yeah. If you look at the 60-minute chart, actually, when I look at my notes, I have the 30-minute chart written down. Yeah, that's why. So again, here we have our rally base drop with that little area coming out of it. And then our stop will need to be, obviously, right above it. Okay? And again, that's not where the stop is. The stop needs to be above it. So we look to enter at the zone, and you really don't need that line. Okay? And then we would look to take this all the way down to just before this area right here. So your target on this could be and again, I would use that like, whatever, 80% or whatever rule you have, whatever number. So that's where the demand is going to start. So we want our stop, well above that. And again, I'm just going to assume this is 80% of this move. But again, I would just pick a number, make it mechanical. What number you pick is far less important than the fact that you made it mechanical. Okay? All right. There's the British pound. Okay. And let's keep going. wanted to look at the equity index markets for a minute. Just because they've kind of fallen off, I don't know if anybody trades these, but let's go to a smaller time frame. And we wanted to see if there was any supply up here. Let's just run through them really quick. We'll run through a bunch of them. Just for a little day trade, right? And here's the DAX. No, not that one. Let's stick to these. So there's the Dow Mini. So for those who don't trade this market, this is $5 a point. But that could be a little misleading because it moves so much. It's pretty much similar to the S&P at $50 a point. Notice the supply zones up here. Here we can look at an entry at the, let's see, 2880, and our stop, probably not above the pivot high, but above this area. Even at 90, should be fine. That's very low risk, for this market. We would look to take that for a move all the way back down to the lows. No, Bollinger Bands, no, I never use any indicators or oscillators or any of that. Remember, all those things, including the chart patterns and the technical analysis books, and Bollinger Bands and moving averages and all that stuff, they're all derivatives of price, meaning they're only going to do what price has already done. So by definition, obviously they lag price, but again, by definition, if we add any decision-making tool, any tool to our decision-making process that lags price like that, all it's going to do is increase risk and decrease reward. Does that make sense? Okay. All right. So you'd have to come down to like a 1 minute chart or tick or volume chart to see that level, but it looks pretty good. You'll see the same thing in the NASDAQ and then the S&P as well. But those levels are key. I pulled up the bonds for a second earlier, but not a whole lot is going on here, so we'll probably leave this alone. Yeah, there's just a price has been down here. They gap down. You can see on the daily, just sitting in between here. That's probably what's likely to happen for the foreseeable future. You have some supply above, but you have two new demand zones below. Okay. Does that make sense? All right. There's my email address. Again, Mark, send me those charts. Anybody else has any questions, you have any challenges achieving your financial goals, let me know. Seiden@tradingacademy.com. And you can send me a chart on another market that we haven't looked at. Not a problem. We apply core strategy to any and all markets and any and all time frames. All right. Have a great day, everyone. We'll see you next time. And make sure you understand the risk before you get into any of these trades. And we'll keep finding them and taking them. Have a great day, everyone.